Now, if you guys are somewhat interested in unconventional investing ideas and or strategies, today's video is going to be a treat for you. Because what we're going to be talking about in today's video is something I really have not heard from anyone else in the community, and this is actually selling covered calls on the popular MSTY Yield Max MSTR Option Income Strategy ETF in order to not only receive dividends and of course option premium, but also to help protect against downside. Because you see, one of the biggest downsides to ultra high yielding ETFs like MSTY and others is not the fact that this ETF is probably going to keep paying massive distributions every single month due to the volatility of the underlying reference holding MSTR, but the main risk or the main worry about MSTY and other ultra high yielders is simply the fact that lots of these names, if the market doesn't play nice over certain time frames, are going to nap decay and keep trading lower and lower. Which is exactly where my strategy that I'm going to share with you guys in today's video is going to come in very handy, because selling covered calls on names like MSTY is going to help protect against some downside. So even if MSTY loses some value, you're still going to be even if not up on your trade. So if you want to see how you can actually sell covered calls on the ultra high yielding MSTY ETF, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, most importantly, understanding what a covered call even is. A covered call, it says right here in Investopedia, an options trading strategy in which the trader sells a call option while also owning the underlying security. Now, if you guys are interested in learning a lot deeper about how to sell covered calls, how to write call options, you're going to want to head over to howtosellcoveredcalls.com. I'll link it first link in the description, and I'll show you exactly how to do so step by step. Now, before I actually go into Robinhood and show you guys how I actually have been doing this and how you can do it too, if you of course are interested. Once again, the idea behind this or the thought process is if I can buy into MSTY, let's say for example, the ETF that's been paying anywhere from $2 up to $4 per share per month. I mean, there is so much income generation potential with an ETF like this one. Once again, because it references MSTR, which is extremely volatile. Names like MSTY and other ultra high yielders seem too good to be true. I mean, 141% distribution rate. These ETFs are downright amazing, but the only downside, in my opinion, relatively speaking, is the fact that these ETFs, like I mentioned earlier, do in fact decay over time, or at least a lot of times it does happen. Now that brings me into today's strategy. We're actually going to be going on the Robinhood platform. I'm going to be sharing with you guys what it would look like if you sold a covered call on an option ETF like MSTY and what this could mean for the trade. Now, to be fully transparent, a few weeks ago, I actually did this with 100 shares of MSTY, and so far so good. So far from where I bought MSTY personally, I'm down a slight bit on the share price, but because I sold the covered call, the option premium is actually in the green, so I'm actually up on the trade even though MSTY has decayed a little bit since I personally bought my 100 shares. Now, if you guys want to stay up to date with how this is going for me, make sure to subscribe because I will keep you guys updated with how this trade and many others do in the future. But let's break this down very simply. Again, I'm going to assume that if you guys are watching this video, you have an idea of how to sell covered calls, and maybe you're very advanced at selling covered calls. I personally have been selling covered calls across my portfolio and other positions for around 6 or so years now, and I've earned thousands every single month basically since I started. Now, first things first, whenever you're selling covered calls, you of course need to buy 100 shares of whatever you're selling a covered call on to have one lot, one option contract. So right now, MSTY, for example, is trading at $22.48 per share. Times 100 means that you would have to invest $2,248 into 100 shares of MSTY. Now keep in mind, 100 shares of MSTY based off the most recent distribution last month, this would pay you well over $200 as far as dividends go for a $2,200 plus investment. But it gets even better, just hold on. So of course, when selling covered calls, you have to choose how many days till expiration or how long of a duration you want to write the option contract on. Now, if we were to max things all the way out, we're talking January 16, 2026. So this is a good amount of time away. This is 227 days away. That's how long this contract is going to last for. Now, this is, of course, unless your shares get called away early, which we'll talk about that too. So the way that this would work, or the way that I personally made this work for my portfolio, is I went a few dollars underneath the current share price of MSTY at $20 per share. So what I'm basically saying here is that I'm okay at any point in time to sell my 100 shares of MSTY, which for example, I just told you guys, I paid $22.48 each for $20 per share. Now you might be saying, why in the world would you sell your shares of MSTY for 20 bucks per share when you paid $22.48 per share? Well, that's because over here you can see the $2.58. That's the option premium I'm going to receive by selling the call option. Now, if we were to choose this $20 strike price, like I said, this is what I did personally for my trade more or less that I made a few weeks ago with MSTY. Just to recap, our 100 shares of MSTY costs $22.48 per share, so we're $2,248 into the investment. Now, by selling this call option and giving the option buyer the right to buy our shares at any time on or before expiration at 20 bucks per share, we are going to receive $2.58 times 100, or $258 in option premium. Now, keep in mind, you get paid the option premium the minute that you actually execute this trade. So we are all in as of right now, in theory, at $1,990, and we still maintain our 100 shares of MSTY. So what does this mean for the future of the trade, and what are some different things that can happen? Well, if MSTY that you bought at $22.48 per share, which is how much it's trading as of right now, if it trades more or less where it's trading as of right now, maybe down $1 or maybe 50 cents more or less in the next month or so, then you're still going to retain your 100 shares of MSTY. You're going to get paid the next dividend, which could be, like I said, anywhere from $100 upwards to maybe $400, depending on what happens. Now, on the other side of things, if of course MSTY goes from $22.48 upwards to $24, $25, $26, $27, anything can happen. Your shares could get called away and you'd be forced to sell your shares at 20 bucks per share, or $2,000 total. Now, the reason this isn't necessarily all that bad of a deal is because you got paid your $258 and you would sell your shares for $2,000 in total, which means your investment was $22.48 and you would actually be out of the trade at $22.58. Now, I get it, a $10 profit is not necessarily all that exciting, but that's more or less quote unquote the worst case scenario. Now, the other things that could potentially happen, if MSTY, let's say, trades down to 21 and then 20, and then maybe even goes down lower and lower from there, you have a few options there. You could always roll down into even lower strike prices and earn even more option premium and sort of short MSTY all the way down, while still, of course, maintaining your ownership of your 100 shares. Now, like I mentioned, I am doing this currently with one lot or 100 shares of MSTY just as sort of an experiment to see if I can, of course, generate a ton of income, but also protect against some downside, which I do think is a concern with names like these. And like I said, for my position, so far so good. I am actually down slightly from where I purchased my 100 shares of MSTY, but because I earned around $200, $300 in option premium, I'm actually still green in the trade. So even though it might sound complicated, there's not really much more to it. That's how you can actually sell covered calls on MSTY, generate option premium, of course, as the call seller, and of course, hopefully earn more and more juicy dividends, which I'm hoping I receive very soon. But more importantly, after I share with you guys how I'm personally selling covered calls in MSTY, I want to hear from you guys down below. When it comes to MSTY, would you ever partake in a strategy like this one? Let me know what you think of it down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.